Welcome back to the Future Show here on the Schwab Network. We're less than 60 minutes from the cash open for stocks on Wall Street. We're starting to see futures change direction a little bit or improve a little bit in terms of the bulls expectation. Let's bring in our next guest. That would be Jenny Horne, markets correspondent. We've got some breaking news with fresh inflation data. Jenny, break down the numbers.
So we are seeing U.S. November core PCE price rose around 0.1% month over month versus the estimates, which had called for, of course, a 0.2% rise. So arguably, we are seeing now some of this real spending increase. I mean, less than had been anticipated. I do also think noteworthy is the fact that on a year-over-year basis, the PCE index was up around now 2.4% again, versus the 2.5% that had been anticipated. So as far as the overall read here, looking up, I mean, objectively, I'd say maybe better than feared. And then also personal income did rise 0.3% versus what had been expected at around 0.4%. Personal spending also was up 0.4% versus the 0.5% estimate. And all of these figures signaling at least some degree of moderation, especially when you look at the prior versus what we actually saw. Like, for example, all of these figures, except for personal spending, actually came in slightly cooler than had been anticipated. Except for actually the price index on a year-over-year basis, that was 2.4% versus previously was 2.3%. But again, coming in better than had been expected. So I think that you could say this was a good read on inflation, especially because this is, of course, a core way in which the Fed really gauges their overall inflation read here, Diane.
Yeah, I mean, 100%. This is, I know I can't. It would probably be an oversell to say it's much better than expected. But thinking about how we were coming into this data point, worried off the back of CPI and PPI and what that read-through meant for PCE, I mean, this is a solid, it's like one of those things where you say they nailed the number coming in at 0.1%. When you look at month over month, 2.4% year over year. Both of those better than expected. I don't know that you could have gotten much better. And we're starting to even see the direction of futures change. I mean, we're not positive at this point, but not as much pressure as we saw, Jenny. But I want to pivot to, I know we've got a couple other things we need to get into, and I know our time is short. So let's talk a little bit about Novo Nordisk. We got some new data from them that's really hitting the stock. What's the latest here?
So the latest is, unfortunately, Novo Nordisk today, despite what could be read as some good news for the market, will shift to some not so good news for Novo Nordisk here, falling substantially this morning after they did post some disappointing clinical trial data for their experimental obesity drug, which they did say that so far, I mean, we saw shares drop as much as 28% on the news. They've slightly recovered here, but now down about 18% pre-market. Their shares that were listed in Copenhagen actually did see a decrease of about 23% midday in trading. But patients that are being treated with this next generation weight loss drug lost an average of 22.7% after 68 weeks, falling short of the 25% weight loss target that they were expecting. So about 40% of those patients lost more than 25% or more of their body weight, which is substantial. But they did say that, again, this combination drug, which combines the active ingredient that's found in Wegovy, Ozempic, semaglutide, as well as other various components, has now been proven more effective for weight loss than their older drugs. But they were barely able to beat out Mounjaro, which of course is produced by Eli Lilly, which has a 22.5% weight reduction over roughly the same time period. So I think this to see, I mean, such a substantial sell-off after we're, again, still seeing weight loss. I mean, 22.7%, but it's not 25%. And that seems to be the margin all anyone cares about was hitting that 25%. And basically the drug's not there yet.
I know. I feel like the reaction that we're seeing to the stock price seems just like a lot when you consider that. I mean, I would love to lose 20%.
I know. I'll take 22.7% all day.
Exactly. I'm like 20%. What's wrong with that? I think it's, obviously it's clearly that's not the number they were looking for. They were trying to hit that 25% target, but in the street is really taking it out on them right now off the back of that. And they really, it was initially this horse race between Novo Nordisk and Eli Lilly, and Eli Lilly seems to be eating Novo Nordisk's lunch when it comes to the weight loss drugs.
I know, and I'll be very curious to see what a new administration looks like for for a lot of these drug pharmaceutical companies because thankfully for, both of these names, they benefited from being in the right space at the right time. But I do think that there's a curiosity about like the pricing dynamics of the healthcare space, the overall competition that could still flood this market. We have a lot of these names, like Hims and Hers, for example, is now producing an off-brand version of this weight loss, the GLP-1 type drug. So I will be curious how it affects both of these names because they've been such outperformers in the space regarding the specific, again, GLP-1 treatments of drugs, but I don't imagine that they'll corner the market for much longer because competition is fierce and everyone's looking right now to offer various, weight loss drugs that could be more affordable because frankly, both of these names run you between $800 and $1,000 a month. They're expensive, of course, if treated for weight loss, not diabetes.
Yeah, very expensive. And, for many, it's difficult to actually even get a prescription. So that's one of the challenges is both costs and, initially for a while was supply concerns. But when we look at, in terms of how investors have treated these stocks, they've treated them very differently. Eli Lilly is up more than 25% year to date. And Novo has barely moved the needle. No pun intended there. All right, let's pivot. I know you've got another stock in focus today, Affirm. It's on the receiving end of an upgrade. What are the details here?
An upgrade from JMP Securities here with a rating of outperform, upgraded from market perform, $78 price target. And the analyst did highlight that Affirm is a long-term secular winner at the expense primarily of the credit card industry. They did say that they're well positioned to capitalize on the current adoption of buy now, pay later solutions for everyday purchases and benefits from a more robust loan payment platform relative to its competitors. So they also are constructive on shares at their current levels based on the expectations for a more benign regulatory landscape in the upcoming administration, which they say removes a key overhang that had previously kept it somewhat on the sidelines. I do think that this name is compelling, especially when you look at the transaction space and in the various ways in which these companies are trading, because all things considered, I know they've had a relatively robust year, but I do feel like there's been this added interest in fintech names in particular in the back half of 2024, really start setting them up well, I think, for the new year. And frankly, again, we've seen recoveries in PayPal, Block. It's not just been an Affirm, but then you look at the ways in which right now the street's valuing this name. It's expensive, I will say, on a forward basis. There's no doubt about that, but street really likes this name. And I think that especially if there's a seasonality component here, right now is the most consumers will spend, at least in my own bubble, all year long. So if you can find ways to finance it, I've always said for Affirm, it's getting themselves on all of these various platforms. The visibility is what makes consumers continue to use that option. It's not really a loyalty thing. It's anywhere you can find Affirm. I do feel like that option's then utilized. So getting themselves to be just more and more places is huge. Amazon partnership is huge. And I think if you're a believer in buy now, pay later, which I am a frequent user of, whether I want to admit it or not, is definitely right now, I think, in favor, just given the spending habits of consumers.
It is, and it doesn't come with the same penalties as, say, a credit card. So that's why you're seeing, and it's not just kind of your peer group, Jenny. We've seen data on just the rise of BNPL and the adoption of it. So this is that time of year where you're going to see more usage, although it's not necessarily the upgrade not necessarily being reflected in terms of the market reaction today. The stock is beating the S&P 500, so certainly one to watch. Jenny Horne, great insight on Affirm and Novo Nordisk, and also breaking the latest inflation numbers. Jenny Horne, markets correspondent here on the Schwab Network, also co-host of Next. Hey, Jenny.